Good morning, everybody. It's the 8th of July. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Jamie Pakenham-Walsh. Good morning, Jamie. How are you?
Morning, Joe. I am all good, thank you. I'm all good. We've got a busy day ahead in the markets with non-farms, so a lot to look at today.
Absolutely, yes. As you correctly stated, it is non-farm Friday, so typically that brings with it a bit of volatility in the markets and a bit of anxiousness ahead of the numbers. Typically, it does create a fair amount of volatility, so we'll do our best to help set you up for the day ahead with a look at the latest headlines and how the charts are setting up ahead of that big number. So let's get stuck into the latest headlines. A bit of a mixed bag of news with some pretty shocking news actually coming out of Japan overnight as well, which we'll come on to in a moment. So first up, in terms of the US initial jobless claims number, that came in with an increase to 235,000 in the latest week from 231 previously. So more people being laid off effectively. So that's not necessarily a great sign ahead of this non-farm payroll number today. In terms of the jobs data, the report will be released today at 1:30 UK time, and an increase in non-farm payrolls of around 275,000 is expected, with an unemployment rate unchanged at 3.6%. A strong release, so a number above that 275,000, would increase speculation of a 75 basis point Fed rate hike later this month, while weaker data may shift its expectation towards a 50 basis point hike. So we'll be keeping a close watch on that as always. In terms of the US yields, they were slightly weaker on the back of the jobs data yesterday. Treasuries overall lost ground with the 10-year yield increasing to 3% before settling just below that level. In terms of what's going on with the ECB, the uncertainties there continue. The latest minutes stated that a large initial rate hike would risk causing an excessive market reaction, but Chief Economist Lane stated that he saw no need to postpone a big rate hike until September, which maintain that high degree of uncertainty. Euro still very much out of favour. We've still got the euro trading at close to fresh 19-year lows against the US dollar. Further dip yesterday in the price. In terms of what's going on with the Bank of England, the external MPC member Mann stated that there was a very high UK inflation expectation over a one-year horizon, and that the decision maker panel survey saw recorded that pricing expectations are now well above the 2% inflation target, as we all know. In fact, the survey suggests that firms expected close to a 6.3% inflation rate over the next year. We also saw a dramatic day in UK politics yesterday, a bit of a U-turn from Prime Minister or ex-Prime Minister Boris Johnson, effectively resigning as the Conservative Party leader, although he plans to take a caretaker role until a new party leader is elected. And the shocking news out of Japan overnight is that former President Shinzo Abe was actually shot in a gunshot attack. According to our news here, he has been assassinated, but if we go on the official news sites, such as the BBC, I don't think they've confirmed as much as that yet, but it certainly doesn't look very good and pretty shocking stuff, really. If you go on the BBC, you'll see here the latest headlines that he's been injured after report of a gunshot attack. He's actually Japan's longest serving prime minister. So that was around 2:30 UK time this morning that was reported. So pretty horrible stuff. Of course, none of us
Hmm.
like to see that.
No, horrible.
Okay, so we can move on to the charts and see if there's been any reaction in major markets as a result of what we've seen in the news over the last 24 hours. Starting off with the dollar index, and there is no signs of that slowing down whatsoever. So we have seen a little bit of stalling yesterday, a bit of a doji actually formed on the daily chart, but still remains at elevated levels with no real sign of that slowing. And obviously we saw euro continue to weaken. Possibility that we see a pullback in the dollar index towards that new support at 105.93, but ultimately we are expecting to see higher prices towards our next target zones on the upside, which come in at 108.74 and 110.25. So still looking pretty robust on that front. If we take a look at euro versus the dollar, breakdown as we saw earlier in the week below that 103.50 level. More weakness posted yesterday, and we are pretty flat as things stand at the minute. So not looking great for the euro. And as we said, that was the lowest prices we've seen since 2002. Can't rule out some sort of correction at some point. And as technicians, we'd be looking for a retest of that newly formed resistance at 103.50, but ultimately looking for lower prices in line with the dominant trend. If we take a look at cable, that continues to hold some level of support around 119.33. So actually a bit of support for sterling off the back of the PM resignation yesterday. Obviously, we'll be waiting to see who is going to be the new interim leader for the Conservatives and what sort of impact that will have on the pound. In terms of the sort of early indications of who the candidates are going to be, there seems to be a few that have thrown their hat in the ring. And what impact that will have on sterling, we'll have to wait and see in terms of their policies and approach to the UK economy, which of course is going to be a priority given where we're at the moment. In terms of other currencies, there's been some fairly substantial moves in a number of those. Dollar Swiss has had a pretty decent bounce, having pulled up just ahead of support at 94.72. So have a flick through here, see if there's anything else particularly standing out. Obviously, without Steve, we don't have the sort of full range of capabilities to sit here and talk about every single pair. But yeah, I mean, the underlying theme really is that euro is getting a bit of a smash, as we can see there against the Canadian dollar. That's not looking very nice at all. Take a look at euro Swiss. We've broken down to new lows here below parity, and no signs of that slowing either. Euro versus sterling, we saw more weakness from euro, and as we said, a bit of stabilization in the pound. So that's resulting in a pretty substantial move lower in that pair as well, potentially lining up for lower prices in line with the dominant trend. Let's move this on to other asset classes. Let's have a look at cryptocurrencies. So Bitcoin trying to overcome this resistance level that we highlighted earlier in the week at 21,866. That would potentially complete a double bottom pattern. So we've had a little bit of a look above this morning, but we've been rejected and we're below it at the minute. If we can see continued gains and a hold above this level on a daily basis and a close above it, then that may confirm that double bottom setup, and we can be looking for higher prices towards 26,137 as an initial move, and then maybe as high as 28,850. So looking a little bit more attractive on the cryptocurrency front. If we look at Ethereum, it's a similar situation. It's trying to get through this resistance here at 1282. If we can get a close on the daily above that, and of course, being Friday, it'll be at the end of the week as well, so we get a weekly close above it, then that would bode quite well, I think, in the short term for some relief in some of these cryptocurrencies. So keep an eye on those key levels there. On the commodity side of things, let's just roll this forward to oil. We saw a bit of a recovery in oil over the last couple of sessions, but it's come only as far as the neckline of this head and shoulders top that we've got drawn on the chart. It's a bit messy over the left-hand side, so it's not the cleanest looking head and shoulders, but if you squint, you can make out a decent looking pattern there. And you've seen a decent reaction into this proposed neckline of this head and shoulders and a bit of a reaction to the downside, having seen that already today. So potential for more downside there, and technically that's actually looking quite interesting. If we look at WTI, we can also see a similar sort of reaction into this resistance here at 101.07, potentially lining up for further declines towards 86.40, which is the next major levels we're looking for on the downside. Taking a look at gold, as you'd expect, that continues to be on the back foot given the strength that we're seeing in the dollar index at the moment. So we pretty easily severed through this support here at 1786. The 78.6% fib level did nothing, and we're trading below that at the moment. So we've got some key levels to watch on the downside around 1676 to 1677. If we take a look at silver, similar sort of situation, although that is stalling. We've seen two dojis in a row, potentially a third if prices hold on to where they are at the moment, but obviously there's a long way to go in the trading session. But this seems to be a pretty important level for silver So anybody looking to speculate on the price of silver, we've got some pretty solid support levels here. Horizontal support and also a 61.8% fib level between 1885 to 1870. So worthwhile keeping an eye on that ahead of the non-farm number later today. Looking at copper very quickly as well, that saw a really big move to the downside. We saw a pretty strong reversal yesterday off the back of a big reversal candle posted on the 6th of July, a big hammer candle there, and some follow through to the upside yesterday. So we'll see if it's got the legs to continue moving higher in short term. Moving on to the indices, let's take a look at the DAX first of all. It's on the back foot today, but it has found some support at this 12,431 level, which seems to be holding, so giving the bull something to work with. Potentially a move higher could pan out towards the upper end of this range, where there's a large support level around 14,800. So from a risk reward perspective, just looking at that now, that looks quite tasty indeed, actually, providing this support can hold at 12,431. But you're looking at sort of 4.5 hour potentially if you target a move up to that major resistance level up there. Looking at the NASDAQ, as we saw yesterday, there was a break of the short-term downtrend, so that lines up for a potential move higher. We're seeing obviously the cryptocurrencies move higher as well, so that may indicate that there's a bit more bullishness going on, a bit more risk appetite being fed into the market. Obviously, we've got this non-farm payroll number today, and that's kind of going to be the decision maker as to whether we see a 75 basis point hike or a 50 basis point hike. I think the lower the rate hike, potentially the bigger reaction on some of these riskier assets like stocks. So keep an eye out for that. S&P 500, that's still got a bit of work to do. I think if we can take out this short-term swing high at 3946, then that may lead to a decent correction higher, although it may just be that we see a reaction into this level, which is really lining up with the neckline of this head and shoulders top. So, we're looking for a decent reaction into this zone. So if we see a failure, we may see a continuation lower towards our measured move targets and the 50% fib level around 3,500 to 3,333. So it could be a very pivotal day on some of these markets. I'm going to leave it there, and Jamie, you can talk us through some stocks.
Nice one. Thank you very much, Joe. We will start as usual with our biggest gainer and loser. It was a pretty strong day across the board in the markets yesterday, so there was some nice moves in some of the bigger names. But starting off with some of these weird looking stocks, I mean, this is a pretty weird one to analyze, but GROV, Grove Collaborative Holdings, was up 84.25% on pretty huge volumes. You can see down here. Traded 38 million shares yesterday as opposed to the usual kind of, well, the previous day it was averaging about 445,000. So a lot flooding into the market. Let's see if we can figure out the cause of this. Grove raced almost 87% higher on Thursday after saying 3 more retailers would be using Grove's plastic-free packaging for their consumer products, expanding its retail footprint to more than 700 stores. So we like sustainability. That's good stuff. Well done, Grove. Our biggest loser of the day, and this one also I thought looks a bit weird because it has this kind of big run-ups before falling pretty heavily, and it's had a bit of a pattern of doing this. But this is IMTE, Integrated Media Technology, down 53% yesterday. There's no news on it, but yeah, a bit of. I mean, sometimes technical analysis I think works really well, and you see examples of when of when you can kind of pick out the trend lines and support and resistance. I think with some stocks, though, obviously there are fundamental drivers behind them, and to me, there's not a huge amount to really analyze on this. There's pretty good support level kind of along here, but these big spike up and down, it's kind of a bit of a gamble, if you ask me. So not something I'd be too interested in trading. Take a look at the heat map for yesterday, and you can see it was really good across the board. Lots of green. Some really strong moves. Google up 3.68%, Tesla up over 5%, Apple up 2.5%. We'll come on to that soon because we've been watching that this week. Nvidia was up 4.81%. That's had a pretty tough time in the last couple of weeks, so a nice move. Pretty nice day all around. The big standout sectors for me, electronic technology has obviously been taking a bit of a beating, so some well-needed relief coming into the end of the week. We'll see how it plays out with non-farms today and how the week closes. But yeah, a pretty good week across the good day across the board yesterday. We will jump into Apple because we've been looking at this key level all week. We wanted to break above at 142.66. We've got it marked. We did get a close above that. So this to me looks like a bit of a turnaround. We've got this higher low in place now, and the potential for a move higher to be extended. I am looking at this 150 level, which isn't too far away. So there's every chance it could get there by today. But that's kind of my next port of call here. If we look at this on a weekly chart, let's get rid of the volume, it's a bit messy. You can see that this is quite, we do like this, get rid of my bad squiggles, they were never very good. But we hit this 38.2, we tried to close below it, but we failed to, and now it looks like the bulls are back in control, at least for the time being. So this key level for Apple is holding up and we are moving higher. So that's good news for bulls of Apple. AMC had a nice 15% move yesterday. That might have been off the back of the GME news, possibly. Shares trading higher amidst increased retail investor interest. Yeah, so it's the retail crew that's driving this one up. Bit of a spike in volume as well. But yeah, pretty nice move. This trend line is still doing a job, but we have run into this resistance, which we struggled to get through in the late days of June. So we'll be looking for a close above that level. You can see we did try to break through it in May by gapping through it. It sold off and then it sold back into this range we've been seeing. But we are seeing higher lows now, so the bulls are putting pressure on the bears that are trying to defend this level. So yeah, we'll see if we can get close through. It'll be great if we get it close through it by the end of this week. It'll be closing above these previous wicks, and potentially we'll be seeing a move higher after that. So yeah, a nice day for AMC yesterday. And on the flip side of that, we'll jump into GME in a sec. I just wanted to look at, did I want to look at Amazon? We've been comparing Amazon and Apple in terms of price action all week. It is quite similar. We are posting this high low here, but we haven't got above this lower high which we've seen. So I want to see a close above that on Amazon today to kind of confirm the potential for a turnaround on this stock. Coinbase is trying its best to get out of this horrible downtrend it's been in for a while, and the first step to doing that is what it did yesterday, a close above this downtrending resistance line. Not huge volume, so I'm not overly thrilled about that, but if we can get another close above it today, perhaps things are looking a bit better. After that, the next stop for me, we need to get above this 63 level. We've got a gap which actually just was closed in June, but if we can get a close above this level, which maybe we'll get today, maybe we won't, but then you're also looking at a bit of a double bottom here as well. And the measured move target, without drawing, it's going to take us into that resistance level there, so something like that. And then, you know, it's a little bit higher than the resistance level, but that would be quite a nice, I'm sure there'd be a lot of profit taking there if we were to get that high, but there's a long way to go before it does get there, so keep an eye on that. GME, Joe pointed this out yesterday. We had the stock split announcement and then a really nice move off the back of that. One of the ideas we put out on our website was buying off this support level, and you know, sometimes you're on the right side of these news events, and that started obviously quite nicely. The volume's picking up, and it was up 15% as well yesterday. So a pretty nice move, looking for that to head back into this resistance up here about 148, 150, that zone there. Google, as we mentioned earlier, had a pretty strong day too, but we're in that resistance still. I need to see a close above this for me before I'm convinced of this heading potentially back up to these levels up here. We've got a 50% Fibonacci retracement from the all-time highs on Google down to this recent swing low. So if we do break through, that's where I'd be looking there. We'll quickly scoot through a couple more. Moderna's had a really nice couple of weeks. We bring this out to a weekly chart. I mean, this week in particular, the close is really, really good above all of these previous wicks. The volume is pretty low though, so I'd like to see a bit more in terms of people getting involved on this move upwards. To me, when there is that slightly lower volume, the conviction perhaps isn't behind it. the move as much as you'd want. I think for me, we'd be kind of looking to target these levels. I think that's where the next area of resistance will come in. We've got that previous swing high here, so that's where I think bears will try and get back in. Nike, we had a bit of a false break on the downside. That had a nice move yesterday, and we'll finish off with Novavax, which it seems like most of these COVID stocks, I think Pfizer's the same, have had a really nice couple of weeks. If we look at this on a weekly chart, you can see, actually I'll take it back to a daily. We did have this downtrending resistance line, which I think I had in the chart, but since we broke through it, something like that. It's not perfectly drawn, but we had this a bit of a coil in front of this level, a nice bit of lower volume as well before we punched through, and now a really strong week in general. If we get to close anything around here, that's a really nice close for Novavax. But same as Moderna, not huge volume, so that's something to keep an eye on. Maybe we'll get a bit more volume today with non-farm payrolls. But certainly something to keep an eye on. This, regardless of the volume, this is a really nice candle for the Novavax pool. So yeah, we'll finish off there. A really nice day yesterday for a lot of these names, and we'll see if they can finish the week strong.
Nice one, Jamie. Thank you very much. Okay, so let's move this on to the next stage of our video, which is where we do the gun to the head challenge. So each day, Jamie and I, and Steve when he's here, of course, pick a live trade idea on the video. Each of the ideas must have a stop and a target, and all of the ideas are placed at market. So just a bit of fun, trying to test our technical skills in finding opportunities under pressure, and trying to set them up with good risk reward. So we continue to do that. In terms of yesterday's trade ideas, and if anybody wants to check these out, they're all on our TradingView profile. Jamie, you went short of the Swiss
Yeah,
market.
I was almost stopped out before I'd even posted it.
Yeah, I did see
I
that.
survived for a moment, but yeah, not a great one. Not a great one.
So that can happen, of course, but I think the rationale behind the trade idea was pretty solid. You were trading into that large resistance level, and anticipating it moving lower, and there was some pretty good risk reward that you'd set up on that 3.6. So had that played out, it would have more than justified itself, of course. I went long of dollar index, just seeing really no let up in the strength there. Bit of a choppiness on that one yesterday, but managed to hold on to. I think make about 0.26R on that one. So no great shakes, but still looks pretty strong overall and still expecting to see higher prices. So yeah, that was our ideas yesterday. So we go again today. Obviously, it's going to be a bit tricky given that we've got a fair amount going on the news side of things, but of course we've got these non-farm payrolls due out a bit later. I'm actually lining up a short trade on Euro Yen today. If we take a quick look at the daily, just to sort of set the tone for what I'm looking at, prices have rallied pretty strongly over a number of weeks, but stalled into this big resistance level here at 144.25. And in recent sessions, we've seen a break of trend. Now, that for me is being, well, a couple of things. We're seeing obviously weakness in euro. Quite considerable weakness, but also we're starting to see a bit more money flood into the Japanese yen as a safe haven, given what we've seen, in markets recently. So I think this could lead to a pretty decent pullback in the very short term. If we take a look at that swing low there, as well from the 16th of June, we're in the process of trying to break through that as well. So I'm going to set up a short trade on that basis. If we can take out this swing low here on the shorter term charts, from the 6th of July, then I think that could really set things off. So I'm selling at 137.63. Price has actually moved a little bit in favor, but obviously I didn't get it on early enough. Targeting a move down to 134.17, so pretty big move I'm looking for on that one, which, if it's going to happen, why not on a non-farm Friday? And the stop is at 138.68, so looking for 3.3R on that one today. And that is going to be published right now onto our TradingView account. So please feel free to check that out if you're interested.
Yeah, nice, Joe. I like the look of that. I've been looking at your dollar index that you've been looking at, but I don't think I can get the risk reward I like. But in terms of a pattern, I really do like what I've seen here. You had this resistance, support, resistance, high, low there, and now it seems to be breaking through the resistance. The problem I have is, can I get a good risk reward level? And I want to trade this. I like what I'm seeing, but the kind of minimum look for is putting the stop below the bottom of the candle. Maybe, you know what, I might just go for it. Have a 2 risk reward or something. I do like what I'm seeing here. This shows to me that the bulls are pushing on through, and we've had such a strong uptrend for such a long time. You could argue it's a little bit overextended, but you know, whenever you think prices can't go higher, they can go higher, and whenever you think they can't go lower, they can always go lower. So I'm just looking for a bit of a continuation of this today. Um, and I'm trading with the trend, which obviously puts the odds a little bit more in your favor. So we're going to look to buy this today, buying the dollar index at current price, which is 107.32. Profit level we're going to have at 107.93, and the stop just below that candle, as I was saying, at 107.03. That gives us a 2.1, so a pretty modest 2.1 risk reward. But I like this setup. This is the kind of thing I look for. So fingers crossed. 'Cause I think this week I think I've been stopped out 3 times, maybe 4. So it'd be nice to end the week on a positive note.
Absolutely. It's the way it goes, Jamie. Don't beat yourself up about it. It's just a bit of fun, as we say, and hopefully people aren't taking these ideas overly seriously. But, since we started doing this, we have produced some pretty decent results, even though it is just designed to be, a bit of fun. But, it's all about those risk reward ratios. So keep
Exactly.
hitting the mark there on the, higher risk rewards, and ultimately, it should pay off if you maintain a disciplined approach.
For sure, for sure. Fingers crossed.
Cool. Right. So there's 2 trade ideas for you guys to check out. Now let's focus on the day ahead because it's, as we said, a pretty interesting one. We've got the US employment report due out at 1:30 today. And also at the same time, we've got the Canadian employment report. So what we can do today, just to mix it up and give you something different to look at, is look at our economic calendar. So our parent company, Acuity, have created a fantastic resource and tool here for traders and investors to use. You can find it on a number of broker sites. Feel free to message us privately if you want to know a few lists of where to get this. But what we can do is drill down into the latest news and high impact economic data points that are due out today. So as you can see, we've got 2 high impact data reports today, and we've got the US employment report and we've got the labour force survey in Canada. Now, what we can also do is have a look at what's to be expected. So we've got a forecast here of 250,000. As we said, a number stronger than that will likely mean that we see maybe a higher rate, a hike in rates. Sorry, no, I think that's the other way around. So a higher number we will see um, that will beat forecasts, and therefore we may see rates accelerated up to 75 basis points, and below that we'll see a 50 basis points. So, quite an interesting number to keep an eye out for today. And if we look at the previous, we can see that was 390,000. We've got an explanation of the data point here, and we can see a history of the US employment report. And what you'll notice is that the dashed line, which is the forecast, versus the solid line, which is the actual, typically are quite wide ranging. So I wouldn't read too much into the forecast because typically they're quite wild and not actually very accurate, which is why we see quite a lot of volatility in this particular data point that comes out on a monthly basis. What we can also see here is based on the last 10 events, what is the average range on some of these key markets that we watch. So this is in relation to Euro US dollar. Typically in the hour after the non-farm payrolls, over the last 10 events, we see around 23 pips worth of movement. And if we look at something like cable, we can see that in fact the pip range is quite similar. Let's have a look at maybe dollar index because that's what Jamie's had a look at today. So have we got that on here? We should have. There it is, US dollar index. So typically a movement of around 0.2% on that one. So if dollar strengthens, that will be pretty nice for you, Jamie, and could see you well on the way to the target of your gun to the head trade today.
Yeah, that's what we want to see. Let's go.
So yeah, pretty interesting stuff there, and gives you a decent indication really of the sort of volatility that you can expect on some of these currency pairs. So if we look at dollar yen, looking for around 22 pips on average. If we look at the Nasdaq, around 0.34% in the hour after non-farm payrolls. Aussie versus the dollar about 18 pips. So, we are expecting a fairly substantial move in a number of assets based on what we've seen previously. Okay, that's that from us. Hopefully, it's been useful. It's the end of the trading week, so good luck today if you are getting involved in the markets ahead of non-farm payrolls. Anything to add, Jamie?
No, it's been a pretty good week, hasn't it? I think yeah, trade safe today, as you say, there's always a lot of volatility around these events, so make sure you've got good risk management and yeah, you're being careful.
Absolutely. Okay, cool. Right, have a great weekend, everybody, and we'll see you next week.
Cheers.
Goodbye.